at some point in human history, money stopped being something you could touch. Power stopped being something you could see. And control stopped asking for your permission. You work, you earn, you save. Yet the rules keep changing quietly, legally, invisibly. Prices rise without a vote. Wealth concentrates without a law being passed. Decisions that shape your future are made by people you never elected, using systems you were never taught to understand. Here's the mystery. How did money become numbers, power become invisible, and control become absolute without a single coup, invasion, or revolution? To answer that, we have to go back, not to a conspiracy, not to a single villain, but to a chain of perfectly logical decisions that slowly removed money from reality, placed control somewhere you can't see. Stay with me, because the most dangerous systems aren't enforced with violence. They're enforced with spreadsheets. Setting the stage when money was real for most of human history, money was brutally honest. Gold was heavy. Silver had weight. Coins had limits. If a king wanted to spend more, he had to raise taxes and face rebellion. If a government wanted to fight a war, it needed metal, not promises. Money imposed discipline because it was physical and finite. But physical money had a problem. It slowed power down. Empires wanted speed. Wars wanted scale. Governments wanted flexibility. And bankers saw an opportunity. The first twist in our story isn't corruption. It's convenience. Origins, the first disconnect from reality. The story truly begins in medieval Europe. Goldsmiths stored precious metals in vaults and issued paper receipts. Claims on gold. People realized something important. Most depositors never asked for their gold back at the same time. So goldsmiths did something radical. They issued more receipts than gold they actually had. This wasn't theft, it wasn't fraud, at least not legally. This was a birth of fractional reserve banking. Money didn't disappear overnight, it was duplicated. One pile of gold now supported multiple claims. At first, this worked beautifully. Trade expanded, economies grew, but a subtle shift occurred. Money stopped representing value. It started representing confidence. People believed the paper was good. It functioned as money. If belief broke, the system collapsed. That vulnerability would shape everything that followed. The rise. When banks became infrastructure, fast forward to the 17th and 18th centuries, governments were expensive, wars were constant, taxes were unpopular. Enter central banking. Institutions like the Bank of England promised something revolutionary. We'll manage debt, stabilize currency, and fund the state without chaos. In exchange, governments gave banks extraordinary privileges. The ability to create money through lending, legal protection, monopoly control over currency issuance. This was the second twist. Power quietly shifted from rulers to financial systems. Kings came and went. Banks remained. By the time the industrial age arrived, money creation had fully migrated from mines to ledgers. And then came the moment that changed everything. The breaking point when money left the physical world in 1971, U.S. President Richard Nixon made a decision that most people barely noticed. He temporarily ended the dollar's convertibility into gold. That temporary decision was never reversed. This was the final severing. For the first time in history, the world's reserve currency had no physical backing. Money was created purely by policy. Numbers replaced substance. From that moment on. Money became software. Central banks could create trillions, instantly manipulate interest rates, inflate asset prices, rescue failures without consequence. And here's the key cause and effect chain. When money became infinite, accountability became optional. Mistakes were no longer punished. Debt no longer had limits. Power no longer needed visibility. The fallout control without force. After 1971, something strange happened. Productivity kept rising, but wages stagnated. Asset prices exploded, but purchasing power declined. Grew faster than economies. Why? Because the system was no longer designed to reward work. It was designed to manage stability at the top. Crises became features, not failures. 1987 crash.com bubble. 2008 financial crisis, pandemic-era money creation. Each time, the solution was the same. Create more money, lower rates, expand balance sheets. Losses were socialized, gains remained private. This wasn't tyranny by force. It was control by design. No soldiers, no censorship, just incentives. And most people never notice the bars of the cage. Failed fixes why every reform makes it worse. After each crisis, promises were made. This time we'll regulate banks, this time we'll protect workers, this time we'll reduce inequality, but reforms never addressed the core issue because the problem wasn't corruption, it was architecture. You cannot fix a system where money is created as debt, debt requires perpetual growth, growth requires instability. Every fix required more complexity, which created more opacity, transparency declined, dependence increased. And power became so abstract that no one could point to it, including the people running it. Modern parallels the pattern repeats. Look around today. Digital currencies, cashless societies, algorithmic credit scores, automated monetary policy, surveillance-based compliance. Money is no longer just numbers. It's permission. Permission to buy. Permission to travel. Permission to participate. The pattern is ancient. Abstract. The system centralized control. Remove physical constraints. Manage behavior through incentives. This isn't a prediction. It's history repeating faster. The shocking truth: the most powerful systems don't rule by fear. They rule by normalization. You don't feel controlled because nothing is taken from you all at once. It's adjusted, optimized, updated, until one day you realize you work harder, you own less, you depend more, and you vote for fewer real choices, not because someone forced you to, but because the system quietly reshaped reality around you. Mine 3 clear takeaways. 1. Money is never neutral. Whoever controls money creation controls incentives, outcomes, and survival. 2. Invisible power is the most stable power when control isn't visible. Resistance never forms. 3. Systems outlive intentions. Good intentions don't matter once architecture is locked in. Final warning and open question: every generation believes control arrives with boots and banners. It never does. It arrives with updates, convenience, and promises of stability. The question isn't whether this system will change. The question is who will understand it first, and who will pay the price for not understanding it at all. Call to action: if this video made you uncomfortable, that's the point. Share it with someone who still thinks money is just money. Subscribe if you want deeper, honest breakdowns of power, systems, and history. And comment below. At what point does convenience quietly turn into control? Because once you can see the system, it can no longer pretend to be invisible.